It's the Brian Lehrer Show on WNYC. Good morning again, everyone. Now we'll dig into the bipartisan housing bill that became law this month nationally. You remember the backdrop probably. President Trump refused to sign this law that was passed by Congress to protest the fact that they weren't also passing his so-called Save America Act to change voting rules around the country. But the housing bill took effect anyway without his signature. That lack of signing, though, is what made the most news. So we want to give you details of what's in the actual law that might affect housing availability and affordability around the land. The new law, for example, restricts Wall Street investors from buying up single-family homes past a certain number, cuts red tape for home builders in various ways, and touches everything from manufactured housing to public housing. What it doesn't include, from what I've read, is any new money. So will any of it actually reach your rent or your mortgage? Joining us now to break it all down is Rebecca Picciotto, who covers the residential rental market and housing policy generally for the Wall Street Journal. Rebecca, thanks for doing this with us. Welcome to WNYC.
Hey, thanks for having me.
I gave the short civics lesson in the intro, but you reported this out. How rare is it for a bill to become law without the president signing it?
Yeah, I mean, this is it was quite a rare moment. I think it's happened, single digit numbers over the past several decades. And yeah, I mean, I think the general takeaway from the episode where Trump refused to sign it was, it was telling that he didn't veto the bill. Like he, in his own words, said this legislation was kind of a, quote, big yawn. And he kind of turned it into, leverage to pursue other political priorities like tightening voter registration requirements. But the fact that he let it become law, even without his signature, I think it tells you kind of the, political necessity that lots of Republican lawmakers were looking at this bill with.
So let's get into what's actually in this thing, because it's a lot. The headline provision is the investor ban, which is your beat. It's not a ban, it's a limit. One of your recent headlines was Wall Street is betting billions on rental homes as ownership slips out of reach. So what and to what degree does this law actually stop those firms from doing?
Yeah, good place to start. The investor ban was certainly the headline provision in, a package with, 50 some odd provisions. And basically this investor ban, it will restrict investors who own 350 single family homes or more from buying more homes. So, this investor ban was kind of, it went through months of back and forth negotiations between the House and the Senate. The real estate lobby was very actively in opposition to this ban as it was initially proposed. But after months of talks, the investor ban is kind of now in a form that the real estate industry can live with, which means it's a bit softer than earlier versions.
Right. Well, when I hear the number 350, I think, wait, that's a limit? A speculating venture capital firm or whatever it is can buy up 350 single-family homes, and that's a limit?
Right. I mean, the White House, when Trump initially proposed this investor ban earlier this year, at the beginning of this year, the White House had initially wanted the threshold to be more than 100 homes, which obviously would have captured a lot more firms. But they settled on this 350 threshold for a variety of reasons. One of which is, when you look at kind of the investor-owned homes in the country, a lot of them are owned by quote unquote mom and pop investors, people who own, maybe 10 to, let's say, 100 homes. That's the large majority of investor-owned housing stock. The 350 threshold, I think there's still questions on how that number was ultimately calculated, but I think it was a signal to the real estate industry that we don't want to get, we only want to go after the super big, institutions, not the mom and pops. Though I hear your point, 350 is still quite a high
What do
threshold.
these institutions do with so many homes? Is that they rent them out for a while until the value goes up and then they flip them, for a profit? Or what's the point of a company owning 350 homes?
Yeah, it's a good question, especially in 2026. I think the business model made a lot more sense in the wake of the great financial crisis. In 2009, when all of these foreclosed homes were sitting, below value, it made a lot of sense to scoop them up in the handfuls and, rent them out and turn them into, large portfolios of single family, housing assets, basically. But today, that business model looks a little bit different just because as everyone knows, the cost of owning a single home has gone up quite rapidly. And so in fact, like the business model for these institutions has changed a bit. The idea of buying one-off single family homes all across the country that made sense, in 2009 makes a little bit less sense. And in fact, a lot of these investors are starting to sell off some of these, what they call them, scattered site portfolios, which means they're scattered all over the country. They've been turning more towards owning like large portfolios of, basically little pockets, little neighborhoods of rental homes. And yes, they rent them out until until the math makes more sense to just sell them off. But yes, lots of them have been pivoting away from the scattered site model, more towards build to rent or, owning a bunch of homes in a neighborhood rather than one or two in a neighborhood.
Listeners, anybody have a question about the big bipartisan housing bill that passed Congress and became law even without the president's signature this month? For Rebecca Picciotto from the Wall Street Journal, 212-433-WNYC, or any story about how this might affect you. And if you own, let's say, 325 single-family homes, you can call us too and tell us what you're doing with them. 212-433-WNYC, 212-433-9692. By the way, it doesn't, as I understand it, make any of these companies divest from a number over 350 if they already own more than 350 single-family homes, right?
That's correct. Yes, they don't have to sell their existing housing stock. And there are also a couple of different exemptions for developers. So if you build new homes or renovate blighted homes to rent them out, you still get to do that. And so, you can be above the 350 threshold if you've added some level of new housing supply to rent it out. But yeah, that doesn't require anyone to divest. The Senate had originally put forward a version that would have forced certain developers who build new rental homes to sell those homes off within 7 years of building them. But that provision was also dropped after kind of, this rigorous lobbying campaign from real estate leaders and from some opposition in the House chamber.
By the way, a couple of listeners chimed in here on your term mom and pop investor homes. One writes, never thought I would hear the term mom and pop investor homes. And someone else, mom and pops have 10 homes? Who are these moms and pops? But I guess you could say it's still sort of a small business relatively to own 10 homes. If that's, maybe that's how they're making their living.
Sure. Yeah, maybe we can shelve the mom and pop term. But yes, it's like these smaller LLCs. It's not the Blackstones of the world. It's a small LLC that owns about 10 homes as you said, a small business. But
all right. Fair enough. So most of the rest of the bill is about making it easier to build, but zoning is local, permits are local. So what does the federal government actually have in its toolbox here in this new bill, now a law?
Right. Yeah. The best way to think about this is not necessarily one big game-changing law, but it's rather a package of kind of small laws that touch on a lot of different themes for housing solutions in small ways. I think it's worth saying that Americans shouldn't necessarily expect housing costs to go down tomorrow or even next year because of this law. As you say, at the end of the day, so much of what determines housing prices and what gets built in America is decided at the local level. But the idea was to use the federal government's limited power on housing to at least send a message to show, the congressional lawmakers hear people's frustrations on high housing costs and they want to do something. So yes, they, touch on cutting some red tape for modular housing, for factory-built housing. They streamline the federal government's environmental reviews, which can often, become redundant if you're doing also state and local environmental reviews. They authorize a new program to encourage local zoning reform, though they can't, do that zoning reform themselves. So there's a lot here, and I do think it, no one is saying that this is going to move the needle tomorrow, and but there's some tangible actions in this legislation that could make a difference, even just at the margins.
And I see there is some money in one piece of this, $200 million a year of federal funding for localities that increase their housing supply to a certain degree. Is that enough cash, though, in total? I guess that's $200 million spread out over how many cities qualify. Is that enough cash to quiet the NIMBY resistance or outbid them in some cases?
Yeah, so it's not new money. This bill is budget neutral. It was designed that way to make it easier to pass. But that fund is basically Congress authorizing lawmakers to allocate that for housing, which is kind of a, just a little bureaucratic nuance. But it's not necessarily a ton of money, but I think this, again, the signal it sends is that if you are a municipality that is making active gains towards building new homes, you are, you'll get rewarded for that. And it's a signal from the federal government that this is what, we want municipalities to do on housing. I think there has been a lot of, not criticism, but commentary on the fact that there's no new money in the bill. And when I talk to housing providers or, real estate leaders, a lot of them say that's not necessarily a huge problem for them. So often what costs them money is, bureaucratic red tape. And so even just cutting that at no expense to the federal government, to them, is a step in the right direction. And they don't necessarily need more money to be thrown at the problem at this moment. Of course, new money always helps, but the idea of cutting red tape is something the federal government can do for $0 that actually saves housing providers money.
On the idea that you brought up before of really big companies being restricted as opposed to smaller LLCs with this 350 private investor homes limit, Richard in Orcas Island, Washington, has a loophole that he is imagining some companies might exploit on that. Richard, you're on WNYC. Hello.
Yes, it seems like a lot of wording, but really does nothing, because all a company has to do is split itself up into different LLCs or whatever and buy up whatever they want to buy up. Even though it sounds like the atmosphere has changed, I can understand that in terms of that. But it has no teeth in this bill for that reason.
Richard, thank you. Fair enough, Rebecca, if a company, let's say, is interested in owning, 500 homes and the new limit is 350 investor homes, they can split up into a couple of LLCs that are ultimately owned by the same people and do it that way?
It's a good question, and I'm sure it will be something that lawmakers are watching as they implement and try to enforce this provision. I haven't necessarily heard of that loophole being implemented just yet, just because I imagine that if there's a big umbrella company that owns a bunch of smaller LLCs, that will be considered one company. But again, this will come with, like all of those loopholes will, aim to be worked out and hopefully blocked as lawmakers start to enforce this. So it's not a loophole I've heard anyone considering just yet, but certainly one I'm now going to watch.
And to the extent of that problem, listener writes, Blackstone and other institutional investors own thousands of single-family homes, especially across the Sun Belt, which has led to housing shortages and astronomical increases in housing prices across much of the country. Trump's refusal to sign the bill has nothing to do with the so-called SAVE Act, but rather to keep his corporate donors happy. So there's two thoughts in that. One is that political analysis of why he didn't sign the bill. But to the numbers that are in the beginning of that text, Blackstone and other institutional investors own thousands of single-family homes, especially across the Sun Belt, which has led to housing shortages and astronomical increases in housing prices across much of the country. Does your reporting back that up?
The sense that, Blackstone's portfolio, yes, spans thousands of homes at this point. And, housing economists will point out that, overall, this represents like 3 to 5, large institutional investors own about 3 to 5% of the nation's single family housing stock. That said, it's a good point to point out that, if you zoom in to certain neighborhoods, especially in the Sun Belt, Phoenix and Atlanta, for example, there's a much higher concentration of these large institutional investors. So those cities absolutely feel, the presence of corporate investors in their housing demand and housing stock. So they might really feel kind of an impact from this ban. That said, as we noted earlier, there's no provision that forces any of these investors to divest. So yes, those thousands of homes, as long as Blackstone wants to keep them, will be able to. They've started to sell some of those off, in fits and starts. But their portfolio is certainly wide spanning in the Sun Belt.
And here's an interesting one. Listener writes, many apartment buildings in New York have 350 apartments and more. What is the alarm over this limit? So that's an interesting question. Is there seen to be some kind of either financial or moral discrepancy between owning 350 apartments in a big building and owning 350 single-family homes?
It's a good question. I think the focus on single family housing speaks to, the way that lawmakers envision the American dream and American home ownership. It's, a lot of people, some people, of course, are buying apartments, but most people, when they think of the home they want to buy, it's because they want to settle, to build a family around it. They want more space. And so that often, in the traditional nuclear family, that often translates to a single family home. And so banning that kind of, investor ownership is, linked to this idea that we want to ban, the lawmakers want to ban investors from buying up the American dream. I think that was kind of the language that lawmakers and Trump had used. That said, it's also worth keeping in mind just like the geography of apartment ownership versus single family home ownership. If you own a bunch of single family homes that take up, X acres of land, that is inhibiting, certain more housing production because land is a key piece of that. If you own 350 apartments that are built into the sky, it's a little bit different. It's not necessarily inhibiting more homes from being built next door. So I think there are a couple of reasons at play there.
On cutting red tape, you've covered New Rochelle in Westchester, just outside New York City. That's cutting red tape and building thousands of apartments. Is there something in New Rochelle, which, some of the people in our area live in and are familiar with, even if they don't live in it, is there something that New Rochelle is doing that's kind of a model for what this federal law is meant to leverage?
Yeah, I think New Rochelle, when I wrote that story, the way I saw it was as really kind of a microcosm or like a, testing ground for permitting reform, like cutting red tape that, again, doesn't necessarily require more money, but just by cutting, streamlining regulations and signaling to developers that, we will make it easy to build homes here. That was the message that New Rochelle leaders were sending and were acting on by, expediting permits. They, expedited environmental reviews and did an entire kind of rezoning of their downtown to encourage apartment development. And That is not something that, the federal government can necessarily do, but it's certainly a model that I think the federal government is trying to encourage with this bill. They can't go into, a town in Westchester and say, rezone your downtown. But if they say there's this new pot of money that, will reward you with if you make considerable gains in that direction. I think there's a sense that what New Rochelle has been incubating in their town and what a lot of cities across the U.S. are experimenting with, that the federal government is now sending a message they want to encourage that.
And the same administration, we should point out, as you do in your article, that just let this no new money housing law take effect, the same administration has proposed cutting federal rental assistance by 43%. You found the uncertainty alone is stalling projects, including an affordable building in Queens that's on hold. So can we look at Trump housing policies here and Republican Congress housing policies and say it's a net negative for affordable housing, despite the positive press that this housing bill has gotten?
I don't know if we can say it just yet. I mean, that proposal was in Trump's executive budget proposal, which Congress ultimately, the part of cutting Section 8 or rental housing assistance by that amount, Congress did not ultimately pursue that. Of course, it's a statement of priority. Any executive budget is a statement of.
So that was a proposal, but it didn't go through, that 43% cut.
Correct. The prospect of it was stalling investors and stalling, housing development. I would also point to, one of the kind of undercovered pieces of the Trump housing, platform or agenda so far was, in the One Big Beautiful Bill Act, they included a large expansion of the low-income housing tax credit, which is sort of since the 1980s when it was passed, it's become, the key tax incentive to get affordable housing built in this country. And, when we think about the net positive, net negative, I do think the expansion of that tax credit has to be in the conversation, because even as there are these threats to rental housing assistance, which absolutely would be a negative if it had been passed, it'd be a negative on housing.
So, in your article, and we have 30 seconds left for one last response, David Dworkin of the National Housing Conference, you quote him saying, the worst thing would be for us to pass this bill and then nothing happens. So how real is that risk?
Implementation is always the big question when it comes to these, large, wide-spanning bills or laws. Dworkin's organization is, using AI, as I wrote in that story, to kind of analyze the best way to implement all of the different, 50 provisions here. It's ultimately up to local municipalities and state leaders to buy in to the signals that the federal government is sending and to implement this. But bureaucracy is always the holdup when it comes to, or part of the holdup. So that's what people are watching.
Rebecca Picciotto covers the residential rental market and housing policy for the Wall Street Journal. Thank you so much for joining us.
Thank you for having me.
WNYC's journalism and storytelling is heard by millions of passionate listeners. Sponsors of our programming gain our listeners' attention and their respect. Learn about how your organization can support WNYC and WNYC Studios at sponsorship.wnyc.org.